Hi, it's Larry Gaines from Options on the Open. We are the leaders in option day trading, and it's our goal to make you consistent and great returns each and every day. In this short video, I'm going to show you something that we do every Friday. Every Friday we have weekly option expiration, or when there's a monthly option expiration, we look to trade just the options that are expiring that day. So we'll look at various different companies or ETFs, and we have a certain way that we'll analyze things, and we'll pull out a couple ideas and trade a couple of different really low cost options. We're looking to buy into these options that are expiring either from 10 cents, 30 cents, 40 cents, something like that, and then looking for big movements to take place during the day to capitalize on it. So with this type of activity, you can make tremendous returns on your capital in one day on these day trades. So I just wanted to show you one example. I'll show you two, actually, two that we did today. Today's Friday. So the first one was we bought GLD. So basically we have a patent pending trading model called the power cycle model, and we use it for day trading and just for longer term swing trades. But for this particular analysis, I used the power cycle trading model, and it had showed GLD currently turning back to an uptrend. It had this big major sell-off, as you can see here, and then the model that we use showed that it was turning back up. And then the other thing I love to trade into are gaps. So you can see right here you had this gap to be filled between right here about 174.90 to up to about 175, 176. So when you see gaps like this and you've had major hard sell-offs, and with our model showing that it was going to be back to an uptrend today on an intraday basis, this was a high probability trade. So basically, what we did was we bought the right towards the open, bought the 175 September calls, which expire today, and paid 30 cents for those calls, and actually, 40 cents, and then the GLD took off, and I got out of those with about a 57% return. So I bought right on the open. I knew the model had turned up, so my risk was $40 per contract, which I wasn't going to take that $40 hit today. If the thing had corrected back, I would have gotten out at probably 20-cent loss or $20 a contract. So, but using our trading model, it showed that the indicators showed on our model had this as a buy trigger for an intraday, and then looking at the chart with this gap, that even made it a higher probability trade. So again, bought the 175 calls at 40 cents. And got out of those just a few minutes later, at around 70 cents. So, that's $30 a contract, and the cost was 40 cents or $40 a contract. That's over a 60% return on capital. So that was one trade, and I'll show you the option chart here so you can see what I'm talking about. Now, this is a chart. This is a chart of the actual 175 call. This is a 5-minute chart. So right on the open, right here at about 9:30, using our trading model, it was triggering that this was going to move up. Bought the 175 calls here for 40 cents, and then got out of these calls right here on the spike for about over 60 cents. Just started selling off. Hindsight being 2020, that was a fast, over 50% return. Should have stayed in these things because look, it went all the way up to 220. So for example, that, buying at 40 cents, and if you say just for, sake of extremes, say that you bought that 40, the 175 calls at 40 where I bought them, and you held to the bitter end and were able to get at the top at 235. That return is, second here, if you'd held at these $40 contract options up to here, that was a 480% return in one day. So every Friday, this is something that we do. We do these weekly plays. Last week made over 155% return on Apple and no, on SPY, excuse me. And then today another trader in our group did Apple, and I'll show you that one. So the other trade was on Apple. Here's Apple daily. So you can see Apple here, it broke above this major resistance level yesterday on the close. So today when it opened up, it held this, it didn't quite fill the gap and held this high, this this opening area here. So the other trade was the $400 calls. So the trader bought the $400 September calls, which expire today, and bought those calls at 30 cents a contract, or $30 per contract, and held that for about 15 minutes and made over a 400% return. So right on the open, it opened, spiked up, pulled back, bought the $400 calls right here at 30 cents. You can see this is a chart of the $400 call, paid 30 cents a contract, and sold this when it got up to the top right here at 140. He made over 300%, close to a 400% return. So he bought this at 30 cents, sold off here at, he was selling out at 120 all the way up to 140. So these are just some of the things that we do at Options on the Open. And if you'd like to trade with us, please come join us at optionsontheopen.com. And we also have a just unbelievable day trading system, and it's called the Power Cycle Day Trading Model. It's a cycle model. We use it for all of our day trading. It's a patent pending model. And if you'd like to learn more about that, please join us at optionsontheopen.com, or check out powercycletrading.com. That's powercycletrading.com to get all the latest information on that. So that's being released actually today or tomorrow. It's a brand new, well, it's not a new system, it's one that we've been trading for months, but now it's being released to the public, so you can buy it if you're interested. So that's called the powercycletrading.com. So go to powercycletrading.com or Options on the Open and come join us, and thank you for your time.